Okay, so we will start the session. I hope can you all hear? Yes. Okay, good. So very good morning to everyone. So welcome to the rapid revision for all our 16 chapters. Right. So we have a very limited time. Right. So with limited time, I will try to give you all as much as possible important areas that is required for your exam, right? So what you might have studied for last 2.5 years, we are going to have a quick uh, rush through of each chapter at most important things. Okay, so before I move on to the session, right, I will just give you some idea about how we can prepare for the exam. Okay, so we have another 7 more days for the exam. Okay, so remember the advanced level exam, which is most important turning point of your life. Okay, your entire future depends on this exam, right? Whether you are going to uh, study further, or are you going to work, or you might have a plan to go to a government university or a private university, or study abroad, right? Or to start a professional course, right? So you have plenty of options after this exam, right? But everything depends on your results. Everything depends on your results. Okay. So therefore, within this limited time period, try to use it maximum, which gives you more marks in the exam, right? Now there is no time to waste. Okay, so you need to have a very good plan for next 7 days. Right. So I will go through all the chapters. If you all have any questions, any doubts that you all want to clear, you can send in the chat. I will clear them. Okay. Right. So I hope you all can hear. Okay. Yes. So what you do is take a book, a separate book, right? I will give you all some important points. So write them down. And take notes. Then it will be very much useful for you. Okay. So let's start with the first chapter. Okay. So I'll just brief you all what is in the first chapter. Okay. And we will try to do some important MCQ questions related to the chapter. So first chapter is basically you get questions in MCQ paper. Okay. So what you have here is mainly the financial accounting, the accounting introduction. Why do we need accounting? The need of accounting. Okay. So this is our first chapter, need of accounting, right? So very basic things. Okay. So always in your paper, the first question is from chapter 1. What do they ask? They ask for objective of accounting, right? What is financial accounting, right? What is the purpose of accounting? Something related to accounting, the types of accounting, then qualitative characteristics, so related to that, right? So I will brief you all each and every area. Okay. Okay, so starting with chapter 1, the most important point here is the introduction part. So once the session is done, I will share all the short notes, mind maps, and everything for you. Okay. So this is the definition of accounting. The definition. The questions are from the definition. Okay. So accounting is, it's a function, provides financial information to different parties to take economic decisions of a business by collecting, recording, classifying, summarizing, and interpreting financial transactions occurred in an accounting entity. Okay, so when it comes to function, you have input, a process, and an output. Accounting function has an input, a process, right? So that is why we call it's a function. And there can be a question asking for what is the accounting input? What is the accounting input? Then the input of accounting are transactions and events. Input of accounting are transactions and events. Then the process. So when it comes to the process, in accounting, we have 5 steps: collecting, recording, classifying, summarizing, and interpreting. Right? So this can be shown like this. So this is your entire syllabus. This covers the entire syllabus, the process, right? The grade 12 topics covers the accounting process. The first step in accounting process is collecting the source document. Collecting the source documents. Then we record them in the prime entry books. There are 7 prime entry books that we mainly focus on: the cash book, the petty cash book, purchases journal, sales journal, return inwards, return outwards, and the general journal. So that is your 4th chapter. Okay. Then the ledger accounts, classifying through the ledger accounts using the double entry principle. Right? Debit and credit. Using debit and credit, we classify them in the ledger accounts. Then we prepare the trial balance. Right? So balancing the debit side always should be equal to the credit side. So we prepare the trial balance. Then we prepare the financial statements and interpret the business financial position and financial performance, right? So this is the accounting process. So we collect the data, collect transactions and events, right? This is the input, and this is the output. Okay, input and output, right? So we were discussing the function. So accounting is a function where there are input, a process, and an output. Okay. Then sometimes they might ask you, what are the features in a transaction? Features in a transaction. Right? There are 3 important features. 2 parties involved. There is monetary term involved, and there is transfer of resources. Transfer of resources. 3 features in a transaction. Right? Then when it comes to an event, right? Accounting input means transactions and events. Transactions has 3 features. Events means like examples like a fire, goods are getting destroyed by a fire, stock losses, depreciation, right? Even though there is no transactions, right? If from an event the assets, liabilities, or equity is changing from an event, if the asset, liability, or equity is changing, we call it's an event. So in accounting, we consider all transactions and events, and we put them in the process, and we get the output, which is financial statements. Right? So accounting is a function which provides financial information. So what is financial information? Information can be divided into 2 types. Right? Let me explain that. Information can be divided into 2 types: qualitative information and quantitative information. So we don't take qualitative information when preparing financial statement. Examples like the manager is skillful, the cashier is trustworthy, right? So these are not accounted. These are not taken to our financial statements. We only take quantitative, but not all the quantitative information, because the quantitative information can be divided financial and non-financial. So we don't take non-financial information. We only take financial information. So in accounting, we take financial information where the information can be valued in monetary terms, right? Okay, so next thing is we provide this information to various parties. This is also another area where you get questions. The stakeholders. So if you take the stakeholders, we have internal stakeholders and external stakeholders. Internal owners, managers, and the employees, internal within the organization. And there are external stakeholders like government, customers, suppliers, banks, lenders, media, right? Any other external parties, right? So all these stakeholders, they make economic decisions, take economic decisions, right? I'll show this one, right? It's a function which provides financial information to various parties to take economic decisions. So what is mean by economic decision? Economic decision means that you have economic subject. The base of economics is we have limited resources, we have very limited resources, but the wants are unlimited. Limited resources and unlimited wants. So you can't satisfy all the wants. Therefore, there is a scarcity. There's a scarcity, and we sacrifice. We select the best option and sacrifice all the other options. Then there is a opportunity cost. So all these stakeholders that we talk, all the stakeholders, they make economic decision where they have different options and selecting the best option, sacrificing the rest, and the opportunity cost. So that is why we call it, it's an economic decision of a business by collecting, recording, classifying, summarizing, interpreting. This is the accounting process. The financial transactions occurred in an accounting entity. So this is the definition. You get more questions from this definition. Okay, so let me just go through few questions. Few past paper questions I'll show, then we'll understand the question types. But if you take the papers, right? So in most of the questions, like these are the types of questions you get, okay, from the first chapter. Always MCQ question number 1 is from the first chapter, right? Now let's say this is 2016. Okay, so they ask which of the following statements best describe the main purpose of accounting. Main purpose. What is the main purpose, right? So we studied the main purpose, objective of financial statement, objective of accounting. right? What do? We provide information to stakeholders to make economic decision, right? Here the answer could be number 5. So likewise, uh, from the definition you get a question. And the second important thing is, I'm taking the main parts from the first chapter. First is definition. The second point is from this this is also another very important part where you get many questions. So qualitative characteristics. So the qualitative characteristics. So remember there are 6 qualitative characteristics. So out of these 6, two fundamental. There are 2 fundamental characteristics where we have the relevant and the faithful representation. Relevant and the faithful representation, right? Relevant for the decision making, and faithful representation means it has 3 sub characters: complete, neutral, and free from any errors. And also remember there is another uh, character which is called substance over form. Substance over form. So this is representation. So these characteristics comes under fundamental characters. Then the enhancing characters. There are 4 enhancing characters: comparable, understandable, timeliness, and verifiable. Okay. So in the first chapter, remember the questions will come. We take it. From the first chapter, what you get is mainly from the definition of objective of accounting. Then the second question, another area of the question is number 2, the qualitative characteristics. qualitative characteristics. Then accounting process. These are the areas that you get. Okay. So you may ask any questions if you have any doubts, any questions related to first chapter. So we can move to the second part. So each chapter, each area, I will give you all few minutes in order to ask any doubts you may have questions which you all want to discuss. I can discuss them and clear. Okay. Right. Right. One more part. This also they check the difference between financial accounting and management accounting. The difference between financial accounting and management accounting. So you know that accounting can be divided into two: financial accounting and management accounting. In financial accounting, we use the historical data, and from the historical data, we provide the financial statements. And management accounting, we mainly focus on budgeted, forecasted data, right? Then the users, internal and external financial information or financial accounting information will be used by internal and external, both the parties. But management accounting, only internal. Financial accounting is only for a specific period. Management accounting, whenever they require, they will prepare the management accounting. And in financial accounting, we follow all the concepts, rules, regulations, but management accounting, we don't have any relevant those kind of concepts, rules, and regulations we follow, which is relevant for the specific business of a specific company, right? So there is a question. So there are the probable questions. Yes, these are the possible questions from chapter 1. Right? Definitely, if you check the paper, one of these or two, maybe more than two. Right? There's a question: what is general purpose financial statement and specific purpose financial statement? I will come to that in the next slide. Okay, so I will be covering that in accounting framework. Right? So chapter 1. Done. Okay, so next what I'm going to do is I will cover up the standards. These are the questions I typed. Right? Yes. Okay. Right. So this is the next part I am going to explain is the accounting standard LKS 1. LKS 1 and the conceptual framework. So from this also you get some questions. Okay, accounting and its need. Okay, so in this standard LKS 1, the conceptual framework, there are only few areas that you need to understand. One is the objective of general purpose financial statements. The objective of general purpose financial statement. Okay, which we covered in the introduction part. So it's very simple to provide. This is what in the standard, to provide financial information about the reporting entity that is useful to existing and potential investors, lenders, and other creditors in making decisions about providing resources to the entity. Okay, now I got a question in the message asking for what is general purpose and specific purpose financial statement. General purpose financial statement means it is the output, it is the accounting output where we make the financial statements, the income statement and statement of financial position, which is provided to all the stakeholders, which is provided to actually for the shareholders, and it is used by many stakeholders, including creditors, customers, suppliers, right, the government. Everybody use the general purpose financial statements. But sometimes the business organization might have to take a loan, or, or they need to find an investor. They make a separate proposal, business proposal. So at that point, if they are making financial statement for that specific purpose, we call it specific purpose financial statement. So most of the times it doesn't have the rules regulations that we following the standards, right? So it is specific, right? So here in the standard, we mainly talk about the general purpose financial statements. Okay, so that is the first point, objectives of general purpose financial statement. Okay, I will share all these presentations. Okay, the second point is, this is also a question that you normally get. What is the underlying assumption in accounting? Underlying assumption in accounting is going concern. So what is mean by going concern? We assume that the business will continue for a foreseeable future. We will continue the business for a foreseeable future, for a long time period. That is underlying assumption. I will explain the accounting concepts. So under that, I will further explain this concept. Okay. So number one, objectives. Number two, underlying assumption. Number three, the qualitative characteristics. Already I have explained the qualitative characteristics. There are two fundamental characteristics and four enhancing characteristics. Relevance, representation, enhancing, comparable, understand. The third point is elements of financial statements. Elements. Then we know that there are 5 elements: assets, liabilities, equity, income, expenses. So assets, remember the definition of asset. and liabilities. Mostly in exams, they might ask this definition: economic resource as a result of the liabilities also has three characteristics: present obligation, transfer of economic resource, and result of past events. Equity means the proportion of assets owned by the owners. Income means increase in benefit, expenses decrease in benefits. So other than that, mainly you may get components of financial statements.
Statement of financial position, changes in equity, statement of cash flow, and the notes to the financial statements. So this is the summary of case 1.
So next standard I'm going to explain is so let's do LKS 10.
Right. So this is
LKS 10. LKS 10 is events after the reporting period. Events after the reporting period of this. Now we prepare the financial statement for a specific year. For example, let's assume that we prepare the financial statement starting from 1st of April 2020 to 31st March 2021. That is the financial year, right? And the financial statements will be authorized by the directors. Authorized by the directors on 30th September. This date could be changed. Could be 30th September, 15th of October. Okay. Then this after the year end, and before the authorization date, after year end and before the authorization date, we call it after the reporting period. So any incident, any event occur during this period is called events after the reporting period. Events after the reporting period. Then there are some adjusting events and some events we do not adjust. So remember only these examples. These are most common examples that we get in our exam. Very simple. In this standard, there are adjusting events and non-adjusting events. Right? Adjusting events examples: changing of net realizable value of stock. NRV change. Bad debt. You had a debtor, he became bad debt due to death or bankruptcy. These are adjusting. A judgment given for a pending court case. You had a pending court case during the at the end of the year, and the judgment was given before the authorization date. So we will adjust that event. And also example like impairment loss of an asset, right? So this, you don't worry. Mainly we get these kind of examples in our exam. And non-adjusting events: dividend, proposed dividend for ordinary shares, decrease in market value of investment, any natural disasters, right? Natural disasters we adjust on that specific date. Okay. But if the event is material, we need to disclose any material events. Okay, so this is the summary of LKS 1. There is a question: what is impairment loss? Impairment loss is similar to the depreciation. Right? Intangible asset. If you have intangible asset, we consider it as impairment. Okay. So let's move on to the next standard. There are some questions. So how could we say that events are material or not? Material events means now any major, like, right, natural disaster, material, you can disclose. Exchange rate loss, all these we can disclose. If there is any like a court case, a customer is filing a case against the company asking for 500 million, asking 50 million, still case is pending, then it is a non-adjusting event but material, so you have to disclose as a note. You have to disclose as a note. Okay. Any other questions? So example for impairment. Impairment plus example, we can say impairment of goodwill, or impairment of any other intangible assets. So we can consider them. Okay, so other questions? We need an example. Okay. Let me take one example because there's a question. Right. Okay, so there was a question asking for to explain some examples. Okay, tell me this question. Which one of the following is disclosure about non-adjusting event? Non-adjusting. So I was explaining adjusting and non-adjusting. So this is what do you disclose? Which one of the following is a disclosure about non-adjusting events? Disclosure. So just now here we studied the non-adjusting events. Dividend proposed for ordinary shares. Okay, so these are non-adjusting events. So what do you disclose? Non-material we don't. Only material information we will adjust. The date that the non-adjusting event occurred. An estimate of the financial effect of non-adjusting events unless a reasonable estimate can be made. Okay, let me. Right. So this is the answer. Dividends declared before the end of reporting period and paid after the end of reporting period. Right. Dividend declared. Already dividend is declared but didn't pay. It's a proposed dividend. So proposed dividend proposed for ordinary shares, that is a disclosure. You need to disclose. Okay, so that is the answer. I will take one more. Tell me this. Okay, this is a good one. This is also LKS 10. Okay, so here the answer is LKS 10 period regulates the extent to which events have to be reflected in the financial statements. Insolvency of customer with a balance owing at the end of the reporting period, issue of shares of debentures and acquisition of another company, issue of shares or debentures, changes in foreign exchange rates, major purchase of non-current assets. Lists of such events consist only of items that according to non-adjusting. So non-adjusting means issue of shares, changes in foreign exchange rates, major purchase of non-current assets. All these are non-adjusting. So answer is B, non-adjusting. That if you take number 1, there are adjusting events. Insolvency of customer, it is adjusting, right? Bad debt. Discover fraud error, it is adjusting. Right? Sale of inventory, this is net realizable value adjustment. Okay, so that is also adjusting. Only B has all adjusting events, all the non-adjusting events. Okay. Right. So let's move on to the next standard. A quick summary. Right. So this is LKS 37. So LKS 37 has 3 main parts: provisions, contingent liabilities, and contingent assets. Provisions means it's a liability of uncertain timing and amount. Remember only these words. Provision means you don't know the time, you don't know the amount, and examples: warranty provision, provision for income tax. Right? So this has to be recognized in the financial statements. Provision, uncertain timing amount, recognized in the financial statements. Then we have 2 more parts: contingent liabilities and contingent assets. Contingent liabilities, remember example, a pending court case. This is not recognized in the financial statements, but disclose if any outflow of resources are assumed. If there is any outflow of resources are there, you need to recognize or you need to disclose. Remember the example, pending court case. Contingent asset also, it is a possible asset. Example, a compensation for land acquired by the Road Development Authority, right? We don't know the amount, we don't know when it will happen, but this is not under the control of our company, our business. It's under the control of third party. Okay, so this is also not recognized. So LKS 37 has provisions, contingent liabilities, and contingent assets. Okay. And the next thing I want to explain is concepts. So we'll have a quick go through of accounting concepts. Right. So mainly we have 14 concepts. So under each concept, you need to know the definition, some examples, and the importance, significance. Entity concept, let me take. Okay. Entity concept, we know that business is separated from the owners. Owner's investment is a liability. Owner's drawing is considered as a withdrawal. Dual aspect, but I will mainly focus on some concepts. Going concern, this is a very important concept. We will continue the business for a foreseeable future. Remember, this was there in LKS1 or the accounting framework. Going concern. What was going concern? Going concern. It was the assumption of accounting. Then money measurement, we record only the transactions which we can measure in monetary terms. Historical cost, we record the assets, liabilities at the cost which is incurred at the acquisition. Accounting period, we prepare the financial statement for a specific period which is 1 year. Accrual, this is also important. Accrual concept. Accrual concept important. So in accrual concept, what we do is we recognize income and expenditure as they incurred and earned. So cash receipt and payment is not relevant when it comes to accrual concept. Okay, realization is relevant for income. We recognize the income or sales when it is realized. Let's say a customer comes and say, I will buy your product tomorrow. That he confirmed. He promised, I will promise you that I will buy tomorrow. So we don't take that promise as a sales because it is not realized. To realize, either you have to deliver the goods or you have to send the invoice, and customer should get that product. Other than until that, we don't recognize the income. Matching concepts, we always match the income with the relevant expense. Examples like cost of sales. We match the cost of sales with the sales. Then materiality. Material in accounting means the important. Any important information we have to show separately in the financial statement. Material. Consistency means we have to consistently apply the same accounting policies, principles when preparing financial statements. And this is important. Prudence. Right? Prudence concept means, remember, all the future losses we will recognize. Future losses can be recognized. And realization concept says future income not recognized, but future losses you recognize. Prudence and realization. Disclosure concept, you disclose full and fair information. Substance over form means more than the legal form. Economic reality is important. Example is the leased assets. Leased assets, even though it is not owned by us, we have to recognize or record in the financial statements. Yes, so just have a go through of accounting concepts. Right. So there are some questions. Will you send these notes? Yes, I will send all the notes, and even there are some recordings available for each and every chapter. So I will share all those things for you. And so can we do some questions on accounting concept? Yeah, I will do some few questions. Okay. Because definitely A-level papers, right? There are two or more questions from accounting concept. For example, let's say this is 2017 paper. There are three questions. There are three questions from 2017 paper. Okay, I'll do a few. Can you all do question number 3 and 4? Okay, so what is the answer for question number 3? Which of the following accounting concept provides the basis for non-recognition of employee competencies in the financial statements of a business? We don't recognize anything which you cannot measure in monetary terms. Okay, now what happens here is non-recognition of employee competencies. Employee competencies we don't recognize because you can't measure that. What is the value of employee competencies? We have a very good manager. Okay, what is the value of that manager? Can you measure? You can't measure that. So in accounting, we record only things which we can measure in monetary terms. Okay, so answer number 5. Then we'll do one more question from this because we have very limited time. But what I will do is I will share all the this is a tube. Okay, so this tube. Now, if you take this tube, it has here. If you are not comfortable with accounting concepts, try to do all these questions. There are 75 questions. So likewise, you can do that. So the next question is, which of the following accounting concept provides the basis for the recognition of debtors and creditors in the financial statements? Debtors means receivable. Creditors means payables. So rather than cash receipt and payments, we record any receivable and payables. What is the concept? Tell me. I didn't get the answer. It's, yeah, it's accrual concept. rather than recording only the cash. We have receivables, payables, debtors, creditors are recorded because of the accrual concept. Okay, so that is chapter. That is accounting concept. Accounting concept is your fifth chapter. So from the today's session, what I am planning is, to touch all these areas and focus on some important points. Now we did the introduction part, accounting process, elements, then accounting concept is entirely your fifth chapter. Okay, then I did LKS 1, LKS 5. Now let's move on to fifth chapter. Let's move on to another separate part. And another thing I want to tell is you have only 1 week more to the exam. Okay, so most of the students, what happens is they try to find new things during this last minute. Okay, don't try and find new things to study. But this 1 week is there in order to revise what you have studied for the exam, right? Don't get confused. Don't think too much. When you go to the exam, you will forget what you have studied. Okay, so you have 3 subjects. Take this 1 week. Now, if I am doing the exam, what I will do is I don't go and refer new things. Sometimes your friends might tell you, oh, there is a new question. You try to do that, but you can't do. Then you try to learn that. So you are wasting your time. Forget about it. What you have studied up to now, you revise them and don't search for new questions, difficult questions. Don't do that, right? Serious things and organize and have a proper plan for the 7 days with best thing and the right thing. Then it's easy for you, right? Okay. So next, what I will do is I will do a question. Okay, right. I will do a question. From the accounting equation. And refer the past papers. Past papers is very important. Okay. Okay, here's the question. Right, so let me take this question. Accounting equation. So before moving to the equation part, let's have a look on the previous questions. Right. Questions in previous years. Every year there is a question from this. Even to 2020, we had a question from accounting equation. Okay, 12, 13, 14, 15, 16, 17, 18, 19, 20. Every year there is a question from accounting equation. And there are different types of questions. Okay. So let me show you the questions previously that you got. Okay, so this was a 2019 paper. 2019 paper, they asked for the, I'll show the answers. 2019 paper, they gave the transactions. They have given the transactions and they asked for equation to record the transactions in the equation. The equation was assets, liabilities, equity, PPE, inventory, trade receivables, prepaid rent cash equals to trade payables, accrued expense, advance receivable, and equity. Okay, then the requirement was to prepare the adjusted profit statement, and they have included the error correction into the accounting equation question. So we had error correction. So see, 2019, they asked for accounting equation, adjusted profit, correction of errors. If you take 2018, given transactions, and we need to record the transactions in the statement, the accounting equation. and they asked to prepare the cash receipt journal and the bank reconciliation statement. So here they check the bank reconciliation statement plus the cash book, the prime entry book. Then 2017 paper, this is different. You have the values in the accounting equation. We need to identify the transactions from this value and calculate the net profit and prepare statement of financial position. So you can see there are different methods they ask the questions. We revise cash book, adjust 2015 income statement, closing equity. This is also bank state papers. You can get them. I will add all of you to the Google so you can follow everything. Right. Now we move to this question. Okay, take your books. We'll quickly do this. Saranga Disanayaka has started a transport service called Sahana Office Transport on 1st of January 2018 by investing 100,000. Transactions related to the 3 months ended 31st March are given below. Payment for printing, show the impact of this transaction with values. Quickly record this transaction. In this let's do Okay, so let's and
Right. Saranga Disanayaka started the transport service for office transport by investing 100,000. I said, could you really complete this? We'll have the 10-minute break. That
We will have 10 minutes break. Okay. After the break, I will discuss the rest of the questions. You all can do this question under that. Right. So we'll quickly do this question. 1st of January, investment of capital 100,000. Then on the same date, 1st of January, payment of 5,000 for printing receipts. Right? It's a payment. Okay, minus cash minus 5,000, and equity will reduce by 5,000. So this is printing expense. Okay. Then 2nd of January, invested a motor vehicle of 1.2 million, which was used by Saranga. It was estimated that salvage value is not available at the end of the useful lifetime is 10 years. Right. So the motor vehicle investment 1.2 million. Asset will equity will also increase by 1.2 million. This is motor vehicle investment of personal motor vehicle. Now, right, you have to depreciate this. Can you all tell me how much is the depreciation? What is the depreciation? Yes, tell me the depreciation. Okay, so 1.2 million is used for 12 months. We are preparing the financial statements for 3 months per quarter. So multiply 3 over 12. So the depreciation is how much? It's 25,000. There is no residual value. So 1.2 million divided by 10 per year, 120,000. Per year, 120,000. So 10 per year, 120,000. Then for 3 months, it's 30,000. Asset will reduce by 30,000. Equity will reduce by 30,000. Okay. So it's very important to show the depreciation in this. Okay. Next. Incurred fuel expenses 10,000 for personal tour of Saranga. So this is 7th of February. Incurred fuel expenses for Saranga. This is expense or drawings. 10,000, and equity will reduce by 10,000. This is drawings. This is not a company fuel expense. This is Saranga's personal expense, personal tour. Okay, so that has to be recorded as drawings. Receipt of other income 50,000. 10th, other income 50,000. It's an income. The other income. Then 7th March, vehicle maintenance expense 20,000. Out of that, 5,000 has not yet been paid. So 7th of March, vehicle maintenance. So expense is 20,000. Vehicle maintenance. 5,000 is not paid means liability 5,000. Therefore, cash paid is only 15,000. Total vehicle maintenance is 20,000. 5,000 is not paid, payable. So 15,000 paid. In 31st March. Receipt of service income. First quarter 600,000. 600,000 receipt. 600,000. Okay, so it is an income. Income. Fuel expenses for the first quarter is 200,000 and only 150,000 was paid. Again, same scenario. Fuel expenses total 200,000, only 150,000 was paid. And balance is payable, 50,000 payable. 31st March, paid 75,000 as driver's salary. Monthly salary is 25,000. So this is total 75,000 expense. Total 75,000 expense. It's completely paid. There is no payable. There is no payable. Salary 75,000. Okay, so this is how we show the financial, the accounting equation. Okay, income statement for the quarter. So if you prepare the income statement, what is the profit? Tell me the profit if you have calculated. You take income minus expenses. Income, you have other income. So you can identify from this. This is income. This is income. These two income. $600,000, 50,000. Everything else expense. Printing, then there's depreciation, vehicle maintenance, fuel, salary. How much you got profit? Can you tell me? So what is the profit? Profit how much? So you can prepare the income statement and show the profit. 320,000. Okay, so this is just the general idea on accounting equation. So next. So then moving to next part, let me briefly go through the double entry system ledger accounts part. Okay, just revising each chapter. Right? So we have covered what is accounting, the introduction part, what is the accounting process, the elements, accounting equation, and we did accounting concepts and some of the accounting standards. Now I will just go through the double entry system. You revise these things, then later it will be useful when before you go to the exam. Right? So we go to double entries. Like this is, actually this is chapter 3. Okay, in the syllabus. Chapter 3 is double entry system. So here double entry means dual aspects concept. In concepts, accounting concept, we have a concept called dual aspect. That means any transaction should be recorded in two places. From that, we derive this double entry principle. Okay, so this is a systematic method of bookkeeping where all the entries have a corresponding opposite entry, debit and credit. Then there are many advantages. You have complete records. You can facilitate a control. You can control the accounts, arithmetical accuracy, and you can use the double entries to prepare the financial statements. Then the ledger. What is a ledger? Ledger is the place where you have all the ledger accounts. Right? Ledger is divided into two types: general ledger and sub ledger. General ledger means where all the accounts are maintained. General ledger. In general ledger, you have ledger accounts. Okay, ledger account has debit and credit side, and this is important. Classification of accounts. This is important because there are MCQ questions from this part. We can classify the accounts into three types: real accounts, personal accounts, and nominal accounts. Real accounts means property accounts, land, building, vehicles. Those are real accounts. The personal accounts means belongs to people, persons. Debtors account, Mr. A, Mr. X, Mr. Y. Nominal accounts means income and expense accounts. Right? Then you know the basic double entry: increase debit, decrease credit. Then types of accounts. There are 5 types: assets, liabilities, expense, income, equity. Okay, and the double entries, you can go through that. Okay, so let's do some MCQ questions. Right, so these are the types of questions we normally get from double entries. Okay, so let's do few questions. Right, tell me the answer for 2011 August. This question, and tell me the answer for 2018 August. 2011 paper and 2018 paper. Mostly MCQ questions only we get. The changes in financial position of an entity for a given period shows the changes in what is the answer? And also do the second question. Okay, so let's check the answer. Right. Okay. So I got answers number 3, number 4, number 1, number 2, 2. All the answers are wrong. So what is mean by changes in financial position? Now you know the changes in equity. Changes in equity, we record, we show the equity, right? The stated capital and the reserves. So what is mean by changes in financial position? What is this? Who can tell me the answer for this? I got one answer, correct answer. Yes, that's correct. Changes in total assets? No. So actually, changes in financial position means, remember, it's cash flow. Okay. So we call cash flow statement as the statement of changes in financial position. Remember this term. Yes, it shows the cash inflow and cash outflows. Okay, so this was a past paper question. Okay, so one more question I will discuss from the double entries and related questions. General ledger. Which of the following? Any doubts? I hope that's clear. If you have any doubts, you can ask. Moving to the next question, 2018. Which of the following statements there is a question, sir, for A levels, do we have to use T accounts or ledger accounts full format? When you are writing the answers in the exam, you can use T accounts. It is not must to show the full format, date, description, amount, but you can use the T account and date, description, amount. You keep that space and write it. So it is not a must to write everything in the ledger. Okay, hope you understood. Okay, so the answer for this, which of the following statement is correct in relation to general ledger? General ledger. What is general ledger? The transactions of an entity are initially recorded in general ledger. That is wrong. Initially recorded in prime entry books. This is wrong. General ledger is collection of accounts maintained by an entity based on double entry system. Yes. The transactions of an entity are posted to general ledger after recording in the prime entry books. Yes. Closing entries are passed for all accounts in the general ledger of an entity at the end of the accounting period. What do you say? Okay, tell me the answer. I got only two answers. Two people. How about others? Right. Right. So how about D? D is wrong. Closing entries are passed for all accounts in general ledger of an entity at the end of the accounting period. No, not all the accounts. Closing entries are passed, income expenses accounts. Closing entries are passed and transferred to the P&L. So answer B and C only. D is wrong. Right. So that's about double entry system and ledger accounts. To be covered. Yeah. So that is what we have in double entries and ledger accounts. And yeah. So I will also share these tools. Okay, so this has more MCQ questions related to this. Then the next chapter is chapter 4. Right, so I was covering double entry system, ledger accounts. Okay, now chapter 4 is the biggest chapter, where we cover source documents, prime entry books, bank reconciliation, control accounts, correction of errors. Okay, so let me brief you all on each sub area. Okay, so starting with source documents. Source documents. Part 1 is source document. So in this, first we understand what is meant by a source document. Source document means it is a proof, original document. It's a proof for a transaction. Okay. So there are many advantages of using the source documents. Okay. So we can prove the transaction. We can reduce errors, mistakes. Then we can have a good control from the source document. Okay. And this is very important. In this chapter, this is important because there are questions from this. The prime entry book, type of transaction, and the relevant source document. So we have 7 prime entry books: purchases day book, document purchase invoice; sales day book, sales invoice; return outward, debit note; return inward, credit note. And the type of transactions also you need to know. Like purchases, we record, remember, purchases day book, we record purchase of stock for resale on credit. Purchase of stock for resale on credit. Let's say, for an example, cash purchases, we don't record in purchases table, right? Then let's say purchase of a motor vehicle on credit. Do you record purchase of a motor vehicle on credit? Yes. Others? Purchase of motor vehicle on credit. Do you record in purchases table? No. Where do you record? It is not stock. It's recorded in the general journal. It is recorded in the general journal, not in the purchases table. So that is why it is important. It should be stock. It should be credit. Stock and credit. Sales also same. And return outward, return out inwards, returns. Cash book, we record cash and check, receipt and payments, including cash discounts. Source documents for the cash book could be receipts, payments, payment vouchers, bank statement, check, counter folio. Those source documents also we can take here. Petty cash book, petty cash payment voucher, general journal, journal voucher, and respective corresponding documents we can take. Okay. So time entry books, important part is this. Then there are different type of other source documents. I will just brief you all on this note is important to understand the purchasing process. Okay, so let me explain this process. But in exam, they might ask you what is a purchase order, what is GRN, goods received note, who is issuing the GRN, who is issuing the purchase order, what is mean by material requisition note, right? So you need to understand this purchasing process. I'll quickly go through this. Now, for an example, let's say we have a production department. The production department need material. So when the production department need material, they will request the material from the stores in the business. So to request the material, they issue a document called Material Requisition Note, MRN. Then if the stores have the material, they will send the material to the production department. But if they don't have the material in the stores, they have to purchase. So purchase is done by a separate department called purchasing department. There will be a purchasing manager, right? Then the stores will issue a document called purchase requisition note. Purchase requisition note. Then the purchasing department, they need to find suppliers. So minimum, they need to search, they need to get quotations from 3 suppliers. That is the norm. That then they can't do fraud, because purchase manager can, he can purchase from his personal contacts, giving a higher value, giving a higher price. Therefore, minimum 3 quotations required. So once they get the quotation, they will check for the price, quality, and other conditions, credit terms, and so many other conditions, the relationship they have with the supplier. Okay, so once they get the quotation, they will select one supplier. Let's say they selected supplier 3, and the purchasing department will issue a document called purchase order to the supplier. Purchase order means that will confirm the purchase of the product which is given in the quotation, right? Which is given in the quotation, they will order. Then supplier will send the goods to the stores with a delivery note or dispatched note. Supplier will send the goods with the delivery note to the stores. And when the stores receive the goods, stores will issue a goods received note or GRN. Very important. Many times they check this GRN concept. Once the goods are received, the company need to do the payment. How to do the payment? To do the payment, company should receive an invoice, which is called the purchase invoice. So purchase invoice will be sent not to the stores, not to the production department. It is sent to the accounting department. So you will be in the accounting department. Then once you receive the purchase invoice, you check for the quotation, check for the purchase order, check for the GRN. So it confirms we have got the quotation. Same thing which was in the quotation was ordered. Same thing which was ordered was received through GRN. You can check. Then you put a payment voucher and do the payment. Once it is received by the supplier, they have to issue a receipt. So this is the purchasing process, including all these type of different documents. Any questions? So no questions, we will move. Okay. So if some goods were returned. Okay, so there's a question. If goods were returned, return will be sent by the stores, right? Then it's return outward. Return outward, we will use a debit note, and that will be sent to the accounting department. They will deduct that amount from the payment. The debit note. So shall we do some yeah, okay. Goods return also will happen here. The goods are returned, return. Then debit note. A debit note will be issued. Okay, so that will be a credit note for supplier. Supplier will issue a credit note because for the supplier it will be a customer, a debtor. Debtor is return means credit note. Okay, let me do some questions because there are some students they ask for questions from the source documents. And if you take the past papers, every year there are questions from the source documents. Okay. So take 2018, see three questions from double entries source documents. Okay, let's do Let's do few questions. Tell me the answer to this. The order of use of prime entry books to record the following transactions of a shoe manufacturing business. Purchase of lorry on credit, purchase of leather on credit, provision of income tax for the year, return to supplier part of the leather purchased. Tell me the answer. So I got several answers. Right. So most of you all say answer 5. Answer 5. Purchase of lorry on credit. Purchase of lorry on credit. This is a shoe manufacturing company. Is lorry their product? Their stock? Is it a stock? Oh. So when you see purchase credit, you try to record it as a purchase, then purchase journal. I told you. Inventory, stock. This is asset. Right? Credit purchase of fixed asset goes to general journal. General journal. Okay. Purchase of leather on credit. Okay. Leather for a shoe manufacturing company is purchases. Is purchases journal. Provision of income tax. That is general journal. Return to supplier. Part of the leather purchased. Return outward. Purchases return. Okay. So there was another question. Sir, can you explain some debit GRN, PRN MCQs? There are two more doubts. Okay, one question says, one more question. Why provision for income tax comes under general journal? In general journal, we record the transactions which we cannot show in any other books. So income tax provision, you can't record in purchases, sales, return inward, return outward, cash. You can't record. So if you don't have a book to record, if you don't have a prime entry book to record, we record all the other transactions in the general journal. So that is why provisions, adjustments, depreciation, stock losses, damages, right? Everything goes to general journal. Then there's another question. But sir, lorry is necessary for transporting goods, right? So why can't be considered as purchases? Right. Purchases journal, remember, we record only the stock, the inventory. If you purchase a lorry, lorry is not an inventory. Lorry is an asset. is of purchase and sale of fixed asset on credit, right? Then the adjustments, accounting adjustments like depreciation, bad debt, uh, accruals. So those adjustments, then okay. Right. So there are some doubts. Okay, tell me this. What is the answer for this? Question number 16. Which one of the following source document is raised by the storekeeper to record the goods received from supplier? Is also commonly asked question. Yeah, simple. It's GR, goods received now. Yeah, it's an easy one. Okay, tell me this. The source document that is issued by a buyer to the seller, indicating types, quantities, and agreed prices for product or services is. What is the answer for this? Buyer is selling, giving to the seller. Yes, what is the answer? PO by 3. It's not a material requisition. It is purchase order. Purchase order. Good. Okay. So we'll do one more. Right. What is GRN? Goods received note. What is GRN? Uh, right. Good. So this is 3. Not accepting goods into the stores. Right. Very good. And there's another question. What, sir? What is the material requisition note? Material requisition note means, as I shown here, this. If the when the production department need material, they request material from the stores. Material requisition note. Requesting material from the stores by the production department. MRN. Material requisition note. Okay, so we'll move to the next chapter. prime entry books. So in this chapter, this is second part of the chapter 4. Again, the different types of prime entry books, and mainly you have cash receipt and payment journal. Let me show the receipt and payment journal format. Okay, so let's check this. Right, so cash receipt journal, we normally have the date, receipt number, description, the discount allowed, amount, and the analysis column. Cash receipt journal. So what are the cash receipts? These are common cash receipts. Cash sales, building rent received, bank loan, receiving from debtors, any other. Okay, after
Okay.
In progress.
so payment journal, cash payment journal, we have the payments, electricity paid to creditors, cash purchases, right? Purchasing of property, any bank loan repayments, drawings, cash drawings. So these are the items or transactions we record in the cash payment journal, and we take the total. Then the cash receipt journal and cash payment journal will be done separately. Then when it comes to the ledger, in the ledger we have a control account which is called cash control account. Right? Cash control account. Okay, so in cash control account, now if they ask in the exam to prepare receipt and payment account journal separately, in the cash control account you don't need to show everything here. Right? There are two methods. One is showing all the transactions, the other one is you can draw a summarized cash control account. In summarized cash control account, what you have is opening balance, You can take the total receipt from here. Here you get the total receipt, and this total payment. Okay, so you can take the total receipt and total payment, opening balance, then you get closing balance. Okay, so there are two methods to prepare the cash control account. This method is okay. Right. Then the day books. Day books are very simple. Opening balance question. There's a doubt. From where do we get the opening balance? It will be given in the question. They will give the question in the question. Opening balance. Okay. So prime entry books. Very simple. Identify the amount of each. Now, if you take the purchases table, we identify purchases from the question and get the total. Sales total. Return inwards and return outwards total. This is the summarized final prime entry book. This if you draw this, you get the marks. And same time, from the prime entry books, we have to transfer the total balances to the ledger accounts. So when you are transferring the total of prime entry books into the ledger accounts, you can prepare the control accounts. So then we have debtors control account and creditors control account. Is it okay to do the? There is a doubt. Is it okay to do the cash control account in shortcut? Yes, fine, no problem. Because it has a summarized total receipt and total payment. Because already in the cash receipt journal and payment journal, you have the full transaction. Okay. So when you do the general ledger, we record the double entries. Purchasers account debit, creditors control account credit. Then return outward credit, creditors control account debit. So likewise, to the general ledger, we transfer the total. Okay. Then there can be a question like this. So this is a question from the teacher's guide. Okay. So this question was from the teacher's guide. I'll just summarize this question. They asked for the cash receipt journal and the cash payment journal. Prime entry books. Also, we can prepare the purchases day book and sales day books related to this. Once the prime entry books are done, we can prepare the ledger accounts. So when preparing the ledger accounts, in general ledger, we have, you can see here the cash control account. Right? So cash receipts are debited, cash payments are credited, and we calculate the closing balance. Then debtors control account and creditors control account. Here we will transfer the amounts from the sales journal, purchases journal, return inwards journal, return outwards journal, and in the cash receipt and payment journal, the transactions related to debtors and creditors. Right? That includes receipt from debtors and discount allowed, payment to creditors and discount received. So those transactions we take from the prime entry books to the debtors and creditors control account. So then other ledger accounts, the remaining transactions will be transferred. Okay, then this is general ledger. General ledger. You can do, right? Basic thing. Then we can prepare subledger. This is where we learn the control accounts plus the individual accounts. So if you take the debtors ledger and creditors ledger, if you take the debtors ledger, there will be individual debtors accounts. Here you can see Venura, Chatura, and closing the debtors list will be prepared with the closing balance. So here there is no closing balance, so 0. And creditors ledger also have individual creditors account, Atula's account, Tushan's account, and there will be creditors list. So finally, after preparing everything, your total debtors list balance should be equal to debtors control account balance. Debtors control account balance should be equal to debtors list. Creditors also same. Okay, so this is in the sub ledger or personal ledger, there is no double entry. It is just to show the individual transactions. Okay, then prime entry books, general ledger. Next step is trial balance, income statement, and SOFP. So trial balance, you take the closing balances of each ledger accounts. Then income statement, from the trial balance, we prepare income statement and statement of financial position. So this is the summary. So, there's a question. So if we are said to prepare debtors and creditors account, can't we do the cash control account in the short form? No, if they ask like that, there will be only few transactions for the cash account. So you can just record the transactions in the cash account. Okay, there will be cash receipt. No need to prepare the receipt payment journals. You can have a cash account, control account. There is a question. Do we have VAT for cash receipt and payment prime entry books? Yeah, if there is any VAT, you can have a separate VAT column in the cash receipt and payment. You can have a separate VAT column here, right? Input VAT, output VAT. There is a doubt. Petty cash journal. Petty cash journal also will come in exam. This is the format of petty cash book. Petty cash book also will come. Okay. So get ready for petty cash book as well. Example, I'll show you a petty cash book like this. Petty cash. Cash receipt will be here, and all the payments will be credited. You have two main columns. This cash column is receipt, amount column is payment. Right? Petty cashier will receive only from the main cashier. That is the main receipt, which is called reimbursement. And from the money he collect from the main cashier, he will do the payment. And end of the period, let's say in this example, he has spent 1,800. He received 5,000. Received 5,000, spent 1,800. Balance is 3,200. So balance brought forward 3,200 and reimbursement. This is called reimbursement. He reimbursed what he spent. Right. Verbal questions. We will do one question out of this. There's a doubt here in this question. This was taken from the this question was taken from the study text. It had 5,300, which is not a petty cash payment. Purchase of furniture. It's not petty cash. So that is why we have not taken this here. We will do some questions. So these are the types of questions you get in prime attributes. Uh, 2018. Okay, I'll do a similar type of question. What's the main difference between inward journal and written outward? Okay, there's a question. What is the main difference between return inward journal and return outward journal? Return inward means what we sold to the customer is returning to us. Return in. Customers returning to us. Return inward, right? So there will be a credit note. Return outward means what we purchase, we return to supplier. Return outward is to supplier, creditors. That's the difference. Okay, so let's do a question. Before that, I'll explain the other few parts in the fourth chapter. Then the fourth chapter has prime attributes, the bank reconciliation statement. Third part. Okay. Bank reconciliation statement is the easiest chapter. Okay. Easiest chapter. Bank rec. So we'll take an example. Okay. Right. So let's do, let me explain this example, bank reconciliation statement. Understand the basics, then it's easy. Okay. So normally the businesses will maintain a current account with the bank, right? So when they have a current account with the bank, for the business, it is an asset account. For the bank, it's a liability account. Business will prepare a cash account to show all the bank transactions. Cash account to show all the bank transactions. The bank will prepare the bank statement to show the transactions with the business, right? So all the debit side in the cash account that should be credited in the bank statement, and credit side of the cash account should be debited in the bank statement. Okay, so there will be opening balance 50,000, 50,000. Most of the questions opening balance will be same, but if there is an opening balance difference, that is because of previous month difference. I will explain that. Okay, so first thing, if there are different types of questions they can give in the exam. Okay, so this is one type of question. You will get a cash account and you will get a bank statement. So you can check for the transactions, cash account transactions with the bank statement transactions. Right, this 20,000. This 20,000 is there in both. 20,000 is there in both. Okay, so it doesn't make a difference, right? So you are going to find out, you are going to identify which transactions makes the difference. See here, the the balance is 100,000, bank statement balance is 95,000. You are going to find out which transaction makes the difference. So 20,000 is there, 30,000 also there in both. 25,000 is not there. That was deposited. Cash account debit means deposited, but not realized in the bank. Okay, credit side 10,000, 10,000. 15,000 is not there. It is given, but not presented to the bank. We call it unpresented checks. So there is unrealized check of 25,000, unpresented check of 15,000. So you can identify this unrealized check, unpresented check. Then there are some other transactions which is recorded only in the bank statement. Those are bank charges, standing orders, direct deposits. These are the most common transactions. Then, once you identify the difference, we have to prepare revised cash account and bank reconciliation statement. Okay, so revised cash account, opening balance will be closing balance of the cash account in this balance. Closing balance of the cash account is revised cash account's opening balance. Then these transactions which were only in the bank statement, we have to record them in the cash account. Any payments, credit, receipt, debit. Bank charges and standing orders are credited. Direct deposit debited. Then you find out revised cash account balance, and that will be transferred to the bank reconciliation. Then there are two more transactions, unpresented checks and unrealized checks. Remember, in bank reconciliation statement, there will be only three transactions we will report. One is unpresented check. Number two, unrealized checks. Then three, bank errors. Right? So when you take revised cash account balance on the top, always unpresented will be plus and unrealized will be minus. Remember P, plus unpresented. P plus unpresented, unrealized minus. Okay. And bank errors, if they have, if there is a credit balance in the cash account, you put it as a bracket. Use the same format. Let's put it bracket if it is credit balance and do the calculation. Sometimes they give this balance, then you have to go out. Okay. Then bank errors. The main doubt that you will get is from the bank errors. Right. So remember, if the bank credited our account by a mistake, if the bank credited our account, it will be added. Erroneously, bank credit. If the bank debited our account, it will be minus. Bank credited means bank statement balance is more. Therefore, we add. Bank debited means bank statement balance is less. So we deduct. Remember that one. Dishonored checks will come to the cash control account. There is a doubt. So in bank rec questions appear for us to find the unrealized and unpresented by giving realized and presented checks. How to attempt ones like this? Yes, there are some questions like that. Let's see. Let's see. Mm, Okay, so this is a question from a past paper. Right, so let's try to do this to understand. I got a question. asking how to find unrealized, unrealized checks, unpresented checks. Yeah, so I think these are the types of questions that you get in MCQ. Okay, shall we do this? Use the following information to answer below questions. A business carries out all its cash transactions through a bank current account. A summary of the cash transactions as per book of account for the month of March. Cash transactions. Cash balance, total cash receipts, total cash payments. In the bank statement is given. Balance, check realized, checks paid, fixed deposit interest, standing orders. Fixed deposit interest and standing order payments are recorded in the books after receiving the bank statement. There were no unrealized or unpresent checks as at first. So beginning there is nothing. Okay, can you tell me the answer to this? So they ask, what is the adjusted balance of the cash book? Can you all do it? Okay, so closing balance. This is before getting the bank statement. Then we have in the bank statement, there are transactions which is not recorded in the cash account. What are those? FD interest standing order payment. So it's very simple. We calculate closing balance. $550. Yeah. Then the second question, which of the following statements are correct with respect to cash transactions of this business for the month of March 2017? Okay, tell me. Part 2, what is correct? The total cash received for the month of March were 1.4 million. Correct. Total cash received. This is the total receipt. 1,200 plus 200. That is correct. The total cash payments 950. 900 here, 50 here. 950. Yeah, that is also correct. The unrealized checks 200. See, deposited 1,200, realized 1,000. So unrealized is 200. It is correct. Unpresented payments 900, paid 750. So this is 150. Number 5. So remember the basics of bank rate. Okay. Right. So next move on to another question. I move to another question. Right. Let's do this question. This covers control accounts, reconciliation. Yeah, the bank reconciliation and control accounts. Shall we do this? Okay, so what we have is the extract of the cash receipt and cash payment. Cash receipts and the bank statement sent for the month ended 31st March is given. Balances as at 31st of March. Extracts of prime entry books for the month of March of Somadas' business. Debtors balance, sales journal, return inward journal, general journal. There are 3 debtors, 3 creditors. In additional information, required correct balance of cash control account, bank rec, control accounts. Start doing it. Right. So let's check this out. Correct balance of the cash control account as at 31st March 2018. Balance as at 31st March cash control account 16,700. Total of expense column in the cash payment journal 10,000 has been recorded as 1,000. Bank has informed that the check issued 20th March was dishonored. Creditor has informed that the discount offered was cancelled. So we need the cash control account. Okay, so let me explain. cash control account. Okay, requirements, cash control account, bank reconciliation, debtors control account, interest control account. So cash control account, we can use this information, additional information. Opening balance is 16,700. Expenses column in the cash payment journal, 10,000 has been recorded as 1,000 in the cash control account. So we have to credit expenses under costed expenses. 9,000, we have to credit more. Bank has informed that the check issued on 20th March was dishonored. Credit has informed that the discount offered was cancelled. Then there are other amounts which is in the bank statement. You have to take them. See, we compare the cash book with the bank statement. 80,000, 80,000. Right? Receipt Sisira 9,200. It is not here. It is unrealized. Building rent 10,000. Building rent, 28 March. Then Then credit side of the cash payment. Check number 303, which is 40,306. That's all we have. And this is not there. Okay, so we will find out the other balances to be recorded in the cash control account. What are the other balances? Bank charges 1,000, deposits 22,000. That's a direct deposit, 22,000. Bank charges 1,000. Insurance 6,000. So likewise, cash control account can be prepared. Check the cash transactions and the bank transactions. Identify differences. Then the reconciliation. Into the reconciliation, you will have to show balance as per cash book plus minus balance as per bank statement. So you take this balance and unpresented unrealized checks. So this cross 9,200, which is a receipt we have deposited but not realized. Unrealized. $9,200. This amount. Then this 18,000. Unpresented. That's all. There's unpresented check 18,000, unrealized check 9,200. Everything else reported. 48,000 won't come because it's a dishonored check which is already recorded in the cash account. Dishonored check. That's all. So you take this balance, you take it here with the closing balance. Then when it comes to individual accounts, when it comes to the control account, from this you can prepare the control account. Debtors opening balance, take the total. Sales total. Return inward, take total. Bad debts total. In the cash receipt and payment, which is given here. So by taking the total values, we can prepare the control accounts. Okay. So this is how we normally get the prime entry books, including control accounts, error corrections, and bank reconciliation. So you have to get prepared for this type of questions. So that is chapter 4. Right, very good. I got some answers. Yeah, that's correct. Okay, so next I'm moving to before the break. I will have the break after this chapter. A quick brush through on manufacturing accounts. Right, so this is okay. Into manufacturing account. Right, so manufacturing account. Normally, a business will prepare manufacturing account if they have a production process, if they manufacture. So when it comes to production, the main purpose of this is calculating the cost. So when calculating the cost material, then all the cost we divide direct and indirect. Then taking the direct material, direct labor, direct expenses will be prime cost. Then all the indirect will be overhead cost. So production overheads will be added to prime cost and we will prepare the total production cost. So then you need to understand the format of manufacturing account. There is a question, so can we do a manufacturing sum? Yes, I will do. right? So direct material, as we explained earlier, all the direct cost, direct material, direct labor, direct other cost, will be prime cost. Then the overheads, indirect material, indirect labor, and indirect other, we call it factory overheads. If you add prime cost plus factory overhead, you get the total production cost. Then the material, normally you will have a working to find out the used raw material. So how do we find the used raw material, which is similar to cost of sales calculation? Opening stock plus purchases minus closing stock. So using that, we will find the material used. Then there will be labor cost and other cost. Sometimes in questions, they might give you the work in progress. Work in progress means partially done or half done products. So work in progress can be adjusted in two places depending on the question. Either we adjust before the prime cost or we can adjust before the total production cost. So this will be given. In the question, they will tell where to adjust this. Okay. And another important point is what are the direct other costs? Packaging charges, packing charges, royalty, patent, copyrights are the direct other costs. This is the summary of manufacturing costs. Right. So if we go through some of the questions like direct material, direct labor and other, then work in progress will be adjusted here in prime cost. Factory overhead, total production cost. So same way only all the questions we have to take. So let's do a question. Okay. So let's do this question, and after that we can have a look. Can you quickly do this? This is a past paper question, which came in the MCQ part. Okay, but it covers the full complete manufacturing part. Okay, can you do this? I'll give 3 minutes. Let's quickly discuss this. Did you all find the answer, guys? Okay. What is the prime cost and what is the cost of production? What is the gross profit earned during this month? It's a good question. The following information is given in relation to manufacturing organization for the month of February. Raw material purchases 300,000. Labor direct labor 170. Direct expenses 30,000. Production overheads 300,000. Raw material opening raw material 50,000. Closing 50,000. Work in progress 100,000. 150,000. Finished goods opening 100,000. 100,000. Prime cost is 550. Total production cost 800,000. Total production cost 800. Yeah, good. Then the trading account. Total production cost we take it here. Then you can get the cost of sales. Cost of sales is 880. What is the gross profit earned? This amount they ask. How much? Tell me. Gross profit is how much? Not the cost of sales. Gross profit. Gross profit. Gross profit. What is the gross profit? So how do you find the gross profit? Now you know this cost plus profit equals selling price. And they are saying that assume the inventory of work in progress is adjusted to cost of production. That is equal. Manufacturing items are sold keeping profit margin of 25% on cost of sales. So profit is 25 on cost of sales. If the cost is 100, profit is 25, selling price is 125. So you have cost 880.
That's the problem. So 25 divided by 100. 25 divided by 100 into 880. We get 220. That means sales is 1.1. So gross profit is 220. That's
prime cost, total production cost, gross profit. Okay. Any questions? So let's have a break, and I will see you at 2. Okay. Okay, so before moving to the next part, the company accounts, there are some easy areas. Okay, so I will discuss those areas, and after that we'll go to the company final accounts. So let's do chapter 15, the marginal costing. Chapter 15, the marginal costing. Okay, CVP analysis or the marginal costing. Cost volume profit analysis. So in this chapter, there are few concepts we need to learn. Concepts. The contribution to sales ratio, break-even point, margin of safety, and number of units to achieve an expected profit. Okay, so these are the points for this chapter. Then when it comes to the questions, I will explain the questions through an example. Example. Okay, normally these are the things you will get in the question. Okay, so when it comes to marginal costing or CVP analysis, there are two things. One is you can remember these equations. Okay, this is what given, and there is another way to calculate these things using a statement. We can use a statement. So that statement is this. This is the statement. Okay, you have sales. If you deduct the variable cost from the sales, you get contribution. Then minus fixed cost, you get net profit. Okay, so if you take this question, selling price unit 500, variable cost 200, then contribution is 300. It's 300 units sold. So unit contribution is 300. Unit contribution is 300. And fixed cost is 60,000. That's the total. Fixed cost is 60,000. Okay. So unit contribution, what is the answer? 300. Total contribution if 300 units sold. Number of 300. Total 300 into 300, 90,000. Total contribution 90,000. Right. So you multiply this. Break even point means, what is break even point? Break even, in the break even point, the profit is 0. When the profit is 0, what could be this number of units? Can you all tell me how much is the break even point? $200. Right. So if the net profit is 0, your total contribution should be 60,000. Then only profit becomes 0. Then if you want to find the number of units, total contribution we have to divide by the number of the unit contribution. So it's 200. Break-even point is 200 units. Value. What is the value? You multiply by selling price. So 200 units into 500. 100,000. Then margin of safety means currently 300 units are sold. Break-even point is 200 units. So 100 units is the margin of safety. Currently, they produce 300 units. Minimum units to produce is 100, 200. So additionally, there is 100 units produced. That is called safety, margin of safety. There's a question. Can you explain break-even point again? Break-even point means the net profit 0, right? Total contribution equals total fixed cost. Then the net profit becomes 0. So to have a, you know these values. Unit contribution is 300, fixed cost is 60,000. Then how many units you need to produce in order to have 0 profit? To have 0 profit, you need to have 60,000 contribution. If the total contribution is 60,000, your net profit is 0. So unit contribution is 300, total contribution is 60,000. Then how many units? Total contribution divided by unit contribution. Oh, this is the equation. Break-even point. This is fixed cost. Fixed cost divided by unit contribution. You will get the number of units to break-even point. Then, if the expected profit is 20,000, how many units need to be sold? Now, this is if the expected profit, net profit 20,000. If you want to get a net profit of 20,000, what should be the total contribution? Tell me the number of units to be produced. Okay, so this is 80,000. 80,000 divided by 300. So it's 267.67. 267.67. That is the number of units to produce. So 267. Make it 267 units. So this is what they ask. Is it clear? Then the next part is investment appraisal. There is a question, so how to calculate sales contribution to sales ratio. Yeah, contribution to sales ratio means this contribution over sales. Contribution is 300 divided by 500 into 100. So you get 300 over 500, 60% contribution to sales ratio. This equation. Margin of safety value means you multiply by selling price. Margin of safety. Okay. Right. Any other questions? Margin of safety ratios. Okay, next I will explain the investment appraisal. We call it project evaluation. There's another question. If target of profit means this is the target profit. If the target profit is 20,000, then yeah, fixed cost plus expected profit. This is the fixed cost. This is expected profit. So total 80,000 divided by unit contribution. Let's say your target profit is 50,000. Then this is 110,000. So number of units to be produced 367. The profit target profit is 50,000. Let's say if the target profit is 100,000, then you have to produce 533 units. So this equation can be used, or else you follow this table. So using the table, you can find out the answer. Okay. Okay, next I will explain the investment appraisal, project evaluation. There is a question. Do we get a compulsory question in project in CVP? Yes, there is a compulsory question. There is a question every year. Let me show the analysis. It's, I have got from 2011 to even 2020 we have. See, every year there is a question from CVP analyst. 19, 18, 17, 16, 15, 14, 13, 12, 11. So you can't ignore this. Very simple, easy technique. Easily you can get the marks. Okay, so you can expect a question from this. Understand the basic and use that basic method for any question. Okay, done. Right. So next we'll move on to the project appraisal, investment appraisal. Investment appraisal, there are two areas, right? Investment in long-term project or investment in short-term assets. We will discuss mainly here mainly about the capital budgeting or long-term projects, right? So there are four calculations that you might need to know. One is the payback period. Other one is the accounting rate of return, and mainly you get another part, the net present value. Net present value. Okay, so definitely there will be a question from this investment appraisal or NPV. Okay, so you get three main areas: payback period, accounting rate of return, net present value. And it could be, the question could be either starting a new project or the replacement, project replacement. You have a project, ongoing asset or ongoing machinery is there. So you want to replace the machine. So likewise, there are two methods. So what I will do is I will do a question. Let's see the past papers. So here, this is also a compulsory question every year. See, every year there is one question from investment appraiser. So we can't ignore this part too. Let's do a target question. Okay. So I have this question. A company is considering to acquire a new solar power generating machine of A for fulfilling the electricity requirement from solar power. Total purchase and installation cost of machine would be 300,000. Salvage value and useful lifetime estimates of the machines are 50,000 and 5 years. Existing average annual operating expense of company is 100,000. Estimated average annual operating expenses including depreciation for the next 5 years and discount rate for 15% is given below. We have annual electricity consumption cost, including depreciation for the next 5 years. Right? Payback period, net present value, recommendation as selection of project based on NPV. Okay, so what we have to do is each year we have to first let's calculate the cash flow, net cash flow for each year. 0, 1, 2, 3, 4, 5. There's a question. What is meant by salvage value? Salvage value means the residual value or the scrap value. Scrap value after 5 years, the selling price. So let's quickly do this. Income, expenses, or received and payments. So, cash inflows, cash payments. Cash inflows and payments. So what happens? a company is considering to acquire a new solar power generating machine to fulfilling electricity requirement from solar power. Purchase and installation cost of the machine would be 300,000. So this is the cost. It is at the beginning. It's a cash outflow. Cost. Year 0, 300,000. Year 0, 300,000. Total cost. Salvage value, useful lifetime 50,000. So after 5 years, you get the scrap value. After 5 years, we will get that 50,000. So that will be a cash inflow after 5 years. Now, the existing cost is 100,000. Average annual operating cost. Existing average annual operating expense of the company is 100,000. Estimated average annual operating expense including depreciation for next 5 years. So this is average annual electricity consumption cost. 70,000, 65,000, 60,000, 55,000. Now we need to find out the savings annual. If we install the new machine, new solar power machine, what is the annual saving? Annual cost saving. Annual cost saving. Savings on operating cost. So existing cost it's 100, right? From the new machine, what is the cost? This includes depreciation. Without the depreciation, what is the value? What is the annual depreciation? Annual depreciation of the solar power generating machine. How do you calculate annual depreciation? 300,000 divided by 5. So annual depreciation is 60,000. Sorry, there is a scrap value, so scrap value we have to deduct minus scrap value is 50,000. 250,000 divided by 5. 50,000 is the annual depreciation. Then what is the annual cost, annual operating cost? Now existing cost is given 100,000 each year, 100,000 every year. Existing cost means currently they are paying for the electricity. So their current cost is 100,000. Every year they have to pay 100,000. Right? That's the current cost. Then if they buy the solar power generating machine, new cost. What is the new cost? New cost is 70,000 with the depreciation. Without depreciation, we have to pay. Because depreciation is not a cash flow, no? So we have to exclude the depreciation. So 20,000 will be new electricity cost. Then 65 minus 50, 15,000. 65, 60 minus 50, 10,000. 10,000. 5,000. This is the new cost. Right. There's a question. Can you explain how to find the existing cost? Existing cost we didn't find. It is given. Existing average annual operating expenses, expense of a company is 100,000. Right? So this is the cost given. Their current electricity bill. Let's say their current electricity bill. Right? 100,000 every year they normally pay. But when they install a solar power machine, right, their electricity bill is 20,000, 15,000, 10,000, 10,000, 10,000. How did you get this? From the annual electricity consumption cost minus the depreciation. Because depreciation is not a cash flow. We are going to find out the cash flow. Then the saving, cost saving. What is the cost saving? 100 minus 20. So you save 80,000 in year 1. 85,000 you save in year 2. So likewise, you are saving these amounts every year. So that will be taken to our cash flow. So 5 years, this is our saving. Yes, tell me, what is the doubt? If you want, you can unmute and tell. How to find new cost? New cost is this 70,000 right? The 70,000 minus annual depreciation. 65,000 minus annual depreciation. 60 minus annual depreciation. From the consumption cost, we deduct the depreciation. So you get the new cost. So these savings. Then we can find out the net cash flow. Net cash flow. Okay, so that's all we have. 2000, right? Salvage value means the scrap value. So we call it residual value. Okay. Now let's find out NPV and payback period. So first 2 years 165, 3 years 255, 4 years 345. So it should be 3 years plus number of months. In 3 years, what is payback period? Payback period means what is the time duration which goes to get your investment. How many years or how many years and month it will take to recover your investment. So investment is 300,000. Within how many years will you get the investment? In 3 years, you get 255 plus 4 years, you get 345. So it will be 3 years plus some number of months. So we need to find that. Payback period. It is 3 years and how many months? Can you tell me how many months? This total is 255. Okay, this total is 255. To become 300, how much do you need? You need another 45. So 90,000 received for 12 months. You receive 90,000 in 12 months. Then how many months will it take to recover? Receive 45. What do you do? In 12 months, you get 90,000. Then 45,000. How many months will it take? Can you all tell me? Very simple. 90, 12 months means 45. 6 months. So we use a calculation, cross and multiply. 45,000 divided by 90,000 multiplied by 12. So this is called cross and multiply, cross multiplication. So this is 6 months. 3 years and 6 months. It will take 3 years and 6 months to recover your investment. 3 years and 6 months. Then the discount NPV. NPV, how do you calculate? Discount factor 15%. You have to take point. This is always year 0, always it's 1. Year 1, it's 0.87, 0.75, 0.65, 0.57, 49. So present means multiply the cash flow from the discount factor. So if you multiply this, you get present value, and addition of all this is called the NPV. NPV will be 14,200. Okay, very simple. I find the net cash flow and multiply from discount factor, then you get the present value. NPV is 14,200. So the third one is recommendation. So if the NPV is positive, we will accept this project. Then you have to write, since the NPV is positive, the project can be accepted. Project can be accepted. If the NPV is negative, we have to reject the project. So always we use this. If the NPV is 0, then either you can accept or you can reject. If the NPV is 0, either the people not to accept, because this current process is going on. So additional, you are getting another project means you have to work on it, and there will be additional resource allocation for that. But anyway, it's a company's decision. Okay, so that is about NPV. And if you go through the past paper, some past paper questions, I'll see this. This is 2017. This we have an old machine and a new machine. So this is acquiring a new machine. Is not a no old machine. So cost of the machine, then the cost, other cost, prime cost and production cost is given for 5 years. Total cash outflow. Then when it comes to inflow, there is sales revenue and residual value, the scrap value that we will receive end of the year. Getting the net cash flow, multiply from discount factor, NPV. So NPV is 570. And this 2017. If you take another question, this 2016. In this, what happens is cash inflow. There is an old machine and the company is planning to buy a new machine. At the beginning, year 0, they are selling the old machine, selling of old machine for 300,000. Then cost of the new machine 100,000. Residual value of new machine 200,000 that will be received after 5 years. And one more thing, very important, which is working capital. See this working capital. So what is meant by working capital? Working capital means it is for the day-to-day operations, the investment. It is an investment. So at the beginning, always remember working capital. If they have given working capital in the question, at the beginning, you have to deduct the working capital. 280 is the working capital here. And after 5 years, you can recover the working capital. After the period, you can recover. So it's plus. Yeah, it's minus, it's plus. Okay. Then savings on operating cost is similar to what we have done in our question. So this is new cost, this is existing cost. So difference 200 saving. So that is they have taken here. If you take 2015, yeah, cost of new machine, operating expenses, income, residual value, working capital. At the beginning invested and recovered. NPV. Hope you all understood. Okay, so let's move to the next. Which cost do not included in machine cost? There is a question. Which cost do not include in machine cost? In machine cost, you don't get operating cost, fuel cost, training cost, right? You will have only the purchase cost, including taxes, duties, and to get that machine to your operating place, the transportation. Like if you have an old machine, the removal cost, installation cost, everything will be added. So once the machine is in working condition, right? After that, if you spend for maintenance, fuel, those costs will not be added. Right. So let me also go through cash flow statements. It is also not a very hard area, but it's also simple to. I will explain that. cash flow statements. So in cash flow statements, you first need to understand some definitions. What is mean by cash? What are the cash equivalent? Cash equivalent means highly liquid investments, which is readily convertible to cash. Then the activities. There are three activities involved in cash flow statement. Investing activities, mainly non-current asset. Operating activities, the current asset and current liabilities. Financing activities means the activities related to equity and non-current liabilities. Then the cash flows can be prepared in two methods, direct method and indirect method. The direct method difference is operating activities. Okay. In direct method, you need to directly find out cash sales received from debtors, cash purchases, payment to creditors, operating expenses paid. So to calculate this, you need to prepare ledger accounts, debtors account, creditors account, expense account. From that, you find the cash receipt and payments. Because in the question, they will give you opening and closing balances. So using the opening closing balances and the other transactions, you can find the cash receipt and payments. Then, in order to find out the interest paid and tax paid, you need to prepare interest account, interest expense account, and tax expense account. That is direct method. Those are the workings for direct method, right? For example, this is a question from direct method. We prepare trade receivables, trade payables, expenses account. Then find out these values. Receive from debtors, payment to creditors, operating expenses. In indirect method, what happens is you will have profit before tax. You will have profit before tax. Then for this profit before tax, we make two major adjustments. First, we adjust for depreciation, we adjust for non-cash items. Then we have non-cash items. Depreciation, disposal profit, disposal loss. Because in the profit, there are non-cash items. From the cash flow statement, we are going to find out the cash flow. So non-cash items should be removed. Depreciation was deducted, so you add back. Disposal profit was deducted. So you add back. Disposal profit was added, so you deduct. If it is a disposal, so likewise, any non-cash item, then also other activities. Since here we are going to find out the operating activity, any other activities we have to adjust it here. Other activities like interest expense is a separate entry. So you will add the interest expense here and later find the interest paid amount and deduct from here. Dividend income, interest income, these are other activities. Adjusted. Then The second part is working capital changes. Changes in working capital. Current assets and current liabilities are the working capital. So mainly you will have inventory, debtors, creditors, and operating expenses, accrual, prepayment, those things. So the easiest way to remember is current assets, there is a negative relationship. Current liabilities, there is a positive relationship. Current assets, negative relationship. Current liability, positive relationship. That means if the inventory increases, current asset inventory, then cash flow will reduce, negative relationship. If the data decrease, cash flow will increase, negative relationship. Creditors, if the creditor increase, cash flow also increase because there is a positive relationship. That is how we adjust for the working capital. Then you take interest paid and tax paid. So if you take a question like this, you will be getting a profit and loss, statement of profit and loss, and statement of financial position. Okay. So in indirect method and direct method, you can prepare the cash flow statement. So if you are preparing direct method, you will have to do workings for these three. What are the three workings? Receivables, trade payables, and operating expenses. And separate workings for interest and taxation. I told you before. Then indirect method, you don't do all these workings. You only do interest and taxation. Everything else will be given in the question. You only have to take the changes. So I will share this calculation video so you can watch that. So summary is this. This is a summary. Direct method and indirect method. So with the cash flow statement, you will also get another question. Sometimes they include the include this also in the cash flow statement, which is ratio analysis. Let me explain the ratio analysis part as well. Ratio analysis. It is the relationship between two variables. There are 5 types of ratios. Mainly you get ratios for the first 4. Okay. So in ratio analysis, what you will have is Similar to the cash flow statement, they will give you the question, you will get a income statement and a statement of financial position. Okay. From these two, you need to find the ratios. So I have taken here the main ratios. Gross profit margin. Let's look at this. First, profitability ratios. So let's see one by one. Profitability ratios. Profitability ratios, we have three ratios based on sales. Gross profit margin is gross profit over sales. Net profit margin is net profit over sales. Operating profit margin is operating profit over sales. Operating profit means earnings before interest and tax, which is profit before tax plus interest. Then based on capital, ROCE, this is the main ratio. This is the one, if you are getting, you will get only this. Then you also have return on shareholders fund, return on shareholders equity. So here most important is gross profit, net profit and ROCE. Okay. Then the second type is liquidity. Liquidity, you have only two: current ratio, quick ratio. Current asset over current liability. Quick ratio means current asset minus inventories. And if you have any prepayment, that is also will be reduced. Third one is these two important. Both ratios are important because in exam they normally give current and quick ratio both. Current ratio, quick ratio. Gearing ratio is debt to equity ratio. Debt capital over total capital. Right? Equity capital plus debt capital. Interest cover, operating profit, EBIT over interest. Then we have turnover ratios. This is also important because normally in exam they check these ratios. So remember one ratio, everything else is similar. Stock turnover ratio means stock. How many times your average stock, your stock becomes as sales. So cost of sales divided by status. Then the period, stock retention period, status. Okay, so these ratios only normally we get in the exam. And other than that, investing ratios, sometimes you might get earnings per share, EPS, net profit over number of ordinary shares. Per share, what is the earnings that you get? Ratio analysis. I'm just touching on the important points. So it's ratio analysis. Right. So we'll have a 10-15 minutes break. So we will touch upon on the remaining parts. Okay, so next we will discuss management accounting. Okay, so management accounting. So at the beginning we studied accounting. There are two parts. Accounting, there are two parts, right? Financial accounting and management accounting. So your grade 12 syllabus entirely based on financial accounting. Up to preparation of financial statements to companies, we study the financial accounting, right? So management accounting is for internal purposes. So we need to define management accounting. Why do we need management accounting? And mainly this is information to make decisions for management. Management accounting is required in order to make decision for management. Okay, and the main need is providing information for management decisions, define to plan the future, right, and check with the actual results and provide solution for provide corrections for any differences. Okay, so mainly here in management accounting we plan for the future. Okay, difference between management accounting and financial accounting. So those are theory parts, right? The management accounting has three main areas. In management accounting, we cover three major areas. Okay, the material costing, labor costing, and overhead costing. Three. Okay, so when it comes to the cost, what is mean by a cost? Cost is something you spend. Okay, but we incur. We classify the cost into different methods, like different criteria based on different criteria, right? Period cost, production cost, direct cost, indirect cost, fixed cost, variable cost, relevant, irrelevant cost, sunk cost, opportunity cost, controllable, uncontrollable cost. We can classify. Okay. So mainly, most important part is according to the nature, material, labor, and expenses. Right. So when we are dividing material, labor, expenses, we divide direct and indirect as well. Direct cost, indirect cost. And if you remember, in the manufacturing account, we divide the cost into direct material, indirect material, direct labor, indirect labor, direct other, indirect other. Okay. Then according to the behavior, this is used when it comes to the marginal costing part. Right? We did marginal costing. In that, we divide the cost, variable cost and fixed cost. Okay. And there are some other methods as well. Now, after the definition part, there are three major sections in marginal costing. So the first section is material, controlling the material cost. So how can we control material? If you take the production, if you take a manufacturing business, the main cost of the business will be material cost. So controlling the material cost is very important for a business. Controlling the material. Right? So there are different methods we can use in order to control material. Okay, let me show. Right. So we can start with material costing. Material costing, there are 4 areas in material costing. The basic principles, then the material, the procedure, purchasing, storing issues, and the latest techniques and pricing of issues. Okay. So when it comes to material costing controlling, most important thing is the 3 stages in material control. 3 stages in material control at the time of purchase. So we need to control the material when purchasing. Because when purchasing, we incur the cost, the price, right? How can we control the cost when purchasing? We can purchase bulk amount, we can have stock levels, right? We need always, the business should have the most optimum amount. We should not have more materials or less material. Having more stock means it is expensive because you need to store them. There can be obsolescence, wastages. So you cannot have excess material. That is costly. And also you cannot have low amount, right? Shortages. That is also expensive because if you don't have the material on time, you might have to buy immediately, so the prices will be very high. So you can't make bulk purchases. Therefore, we need to have the optimum amount of material in the stores. So at the time of purchasing, you can control. Then second, at the time of storing, when storing without wastage, minimum stock levels, right, can be arranged. And you can have different methods like centralized, decentralized storing methods. And also we can control the issuing the stocks to the departments. There's 3 stages. Then first stage is purchasing control. How do we control the purchases? So this is the procedure we already discussed today. So already I discussed this material purchasing process. Okay, so this way they can control, having different suppliers, quotations, using source documents, using documents, right? So they can control the cost using that. A very important point here is material should be purchased only when it is needed and in most economic quantities. This is very important point. We should purchase only when it is needed and in most economic quantity, right? That is material purchasing control. Store control means the stores, controlling in the stores. So this is also an important point. A storekeeper is the person who is in charge, because there were some MCQs, who is in charge of the stores department. So he will protect the material, avoid overstocking or understocking, keeping records, wastages. And in the stores, there can be a proper layout. If you don't have a proper layout, the stocks will be misplaced. So it's very difficult to identify. So there are different methods. They can use centralized, decentralized storing methods. And they also can have codes for different materials. So it's easy to identify and to restore, to purchase and all. Having a code is good for a company. And in the stores, they use different control systems: ABC system, economic order quantity, stock control levels, 2-bin system, just in time, periodic review. Right. So these systems, you need to have a basic understanding, right? And EOQ calculation, it's a must. Like you need to know the equation for EOQ. And stock control levels, maximum stock level, minimum stock level, right? Economic order quantity, economic order level, then average stock, minimum, maximum. So those calculations important. I will brief you all on that. Two bin system. This is just a basic method. Okay, just in time also. These are just method. No calculations. Only explanation will be there. ABC system. And inventory related cost. There are 4 costs. One is ordering cost, other one is holding cost, stock out cost, and cost of the stock. Just to have a just go through this. I will share all this, okay? Once the session is done, I will email all the notes, presentations, mind maps, everything to you, including the recordings. Okay. Then the EOQ, economic order quantity equation. This equation is very important. Normally, every year they check this EOQ calculation. 2 DCO divided by CH. 2 DCO divided by CH. Cost of ordering. CO means cost of ordering. CH means cost of holding. Right? So very important equation. Then that is EOQ. Then 2 bin system means having 2 bins, using first bin, and once it is over, we will reorder until we get the goods. We will use the second bin, right? And the most important, another most important part is stock control levels. Reorder level, maximum stock level, minimum stock level, average stock level. You need to memorize these equations. Reorder level equation, then maximum stock level, minimum stock level. It is there in the tool which I'm going to send. So you can follow that. Let me share the. So this is the tube, okay? So this has stock control system, ABC system, economic order quantity. Here is the equation. In the 2 bin system, a brief explanation is given here. Stock levels, you need to write the equation here. Okay, just in time, periodically. Then the issue control, we control the issues using different pricing methods, mainly first in, first out, and last in, first out is not used right now. We use a weighted average costing method. Okay, so that's about material. Then when it comes to labor cost depends on the labor timing. How many hours, how much time they spend, right? So first thing, they need to record the timing. They use different timing techniques, timekeeping method, time booking methods, right? So based on that, labor cost will be calculated. And labor remuneration. Okay, so when it comes to labor remuneration, we have salaries and wages, calculation of salaries and wages. Okay, so let me explain the salaries and wages part. There will be a question from salaries and wages in MCQ as well as second part. We will get this. So this is a full question which covers the entire salaries and wages part. This is called a salary sheet. This is called a salary sheet. There is employee number, employee name, basic salary, and the additions, gross salary. So basic plus additions will be gross salary. Then there will be deductions, EPF, pay, welfare loan. Then you get net salary. Then the employer EPF and ETF will be deducted. Right? And most important thing is the journal entries. Remember the 4 steps. There are 4 steps in salaries and wages. First step, you have to record the gross salary. What is the double entry for gross salary? Salary expense salary control account credit. That is this amount with salary control account credit. Expense account debit, control account credit. Right? Then the deductions. All these deductions. So deductions will be debited to control account, salary control account, and credited to the relevant deduction account. First, for all the question, follow these 4 steps. Okay, nothing to worry. Only from this you will get the questions. Right? This is a final summary. Gross salary deductions. Third step, EPF employer contribution. Fourth step, ETF employer contribution. Employer contributions are expenses. So both EPF and ETF employer contribution will be debited to expense account and credited to relevant EPF and ETF payable accounts. And one more thing, the drafted income statement and financial position. So what do you get in income statement is the gross salary. You will get the gross salary as administration expense. EPF expense. This is EPF employer contribution. ETF employer contribution. So these are the 3 items which comes under administration expense. Then the statement of financial position, you will have current liabilities, EPF payable. This includes employer, employee both, 8% and 12%, or else 10% and 15% both. ETF only employer contribution is 21,600, and any other payables, payable, and if the salary is not paid, that will also come here. So this is the overall picture about salaries and wages. Right? Journal entries, salary sheet, and draft financial statement. Okay, so moving to next. So I was explaining the labor cost. Labor cost, we have wages calculation, right? How do we calculate wage? There are 2 methods based on the time, based on the output. One of the method can be used. Okay. Pay sheet only I was explaining, basic PPA, PDF. Yeah, format example, double entries. Right. Then the key part is overhead cost. Remember, again I will repeat, in management accounting, we will discuss the management accounting under 3 areas. Material management accounting, the main objective is controlling the cost control, right? Then it is divided into 3 areas: material costing, labor costing, and overhead costing. So the third part is overhead cost. Then overhead cost means all the other expenses like electricity, water, insurance, not all indirect costs. Then when it comes to overhead cost, this is very important. The process. How do we distribute the process overhead cost into the product? So when you want to distribute the overhead cost into product, we follow 4 steps. There are 4 steps involved. First step is collecting the overhead, collection. Then allocation of overhead cost. Allocation means directly you can allocate for different departments. Then apportionment. Apportionment, primary and secondary. Production department and service department. This is one compulsory question in second paper. Then the fourth one, absorption of overheads. Right, so we need to know the apportionment basis. Examples like electricity rent rates, this will be apportioned based on the flow area. Water bill electricity based on the unit consumed. So that is also you need to have a brief understanding. And absorption rates, mostly we will use this labor hours, machine hours methods. Okay, absorption rates, we calculate total overhead cost divided by the rate, absorption rate, absorption basis. If it is labor hour, divide by labor hours. Okay. So let me show you a question. So something like this. You will have different departments. So this question, there are 4 departments, 2 production departments and 2 service departments. Direct, indirect wages, indirect material, directly allocated here. These are directly given for each department in the question. So you can write as it is. And other overheads like depreciation, insurance, these we have to find the basis and allocate based on that basis. So this is called allocation. Right. There are 4 steps now. One is collection, second one is allocation. Third one is apportionment. This is allocation, this is third step. Apportionment, and there is something called reapportionment. The service department cost will be reapportioned to production department because service department doesn't make any product. Therefore, service department cost will be reapportioned to the production department. And the absorption rate. Absorption rate means this is the total cost divided by the base. In the question they have said, take the machine hours as the base. So machine hours will be given, budgeted machine hours. So 18,000 budgeted machine hours. So this is how we do the overhead costing, apportionment, absorption, allocation. So this is also same here. There is cutting department, sewing department, service department, technical. So you allocate and apportionment, then reapportionment, calculating the rate. You post 5 steps. Only 4 steps. This is same step. Then after doing it, calculating the total cost. How do you calculate the total cost? You take the material, labor, overhead based on the absorption rate. Then you get the total cost. Then if you want to get per unit cost, divide by total units. Right? This part is only for overheads. After overheads, you will sometimes they might ask you to calculate unit cost. To calculate the unit cost, you have to take material, labor, overhead. Overhead will be taken based on the absorption rate. Right? And so that is the maximum we have in management accounting. Okay, that is the overall picture. This is quick, rapid revision of that entire area. So next I will move to non-profit organizations. So in non-profit organizations, there are few areas. So the first part is preparing subscription income account. Let me take the tube. Okay. Non-profit organization. Right. So this is the concept. Non-profit organizations means the organizations where their main objective is not profit but to provide services to the members and the generally for the society. So when it comes to the accounting part, they will mainly have three accounts. One is income and expenditure account, receipt and payment account. These are the three accounts: receipt and payment account, income and expenditure account, and the balance sheet. Okay, so the questions we get is to prepare these three. And the special points, donations, there are two types of donation: special donation and general donation. And they also have entrance fee, admission fees. And the main income of the non-profit organization is subscription. So the questions will be asking for income statement or income and expenditure account, or else the receipt and payment account, or including the statement of financial position. And another thing that you need to know is, even though the non-profit organization, their main objective is not the profit, they might have a profitable business in the company. For an example, a non-profit organization or a sports club can have a canteen. A sports club can have a bar, right? So that from that bar or the canteen, they will earn profits. Okay, so let me show you some examples, some questions. Okay, we can follow these steps. In non-profit organization, we follow these steps. First, we can draw the format. What do you need? You need ledger accounts, statement of income and expenditure, statement of financial position, statement of affairs. So what do you find from statement of affairs? The opening accumulated fund. We find opening accumulated fund. Okay, and second step is complete the ledger accounts. These ledger accounts. Third step, statement of affairs. Fourth step, income and expenditure. Final step, statement of financial position. So depending on the question, you will follow these steps. There is a question. So can you explain life membership fee account? Yes. Right. So life membership fee is like this. Look at this example. In 2018, no members. Then 6 members joined the club. 1,200 paid. Right. Each member paid life membership 200 rupees. Right. Annual membership is 20. So first year in 2008, 120 will be transferred to income and expenditure. Then the closing balance is 1,080. Next year, another 120 will be charged to income and expenditure. And the balance is 960. Third year, another 120 will be charged to income and expenditure. Balance will be 840. So annually, we transfer annual subscription to the income and expenditure. Balance will be carried down as it is a liability. Special, there's another question, how to record the special donation. Special donation is categorized under accumulated fund. It's a separate fund. So let me show you an example. It's a separate fund where we need to show under accumulated fund somewhere here. In accumulated fund, before the non-current liability, you can have the special donation. There's a question. Is it must to show the working for MCQs in the A-level? Oh, okay. Oh, MCQ, you never show the workings. It is not required. Without any workings, you can just calculate the answer and write it. For MCQ, no, not required at all. Right, so that is, and if you take incomplete records, that is also similar to the non-profit organization, incomplete records. Both the question, the answering methods are same. Okay, so incomplete records, there are two major parts. One is calculating the profit calculation. This is very simple. Okay, so profit will be calculated using the equation where we use the net assets. So the equation will be profit or loss equals closing net asset minus opening net asset plus drawings minus additional capital. So we use that equation to find out the profit. Okay, so in A level, first paper, every year there is a question from this. Okay, and the second part is preparing trial balance, financial statements. Now in preparation of financial statements, sole proprietorship financial statements, that is also mixed with these incomplete records. And you can find out MCQs as well. So this incomplete records and non-profit organization preparation of financial statement is something which is similar. Okay. I'll show you some questions. Incomplete reports. Here, this is a question of incomplete reports. Follow the steps. Here, normally in incomplete reports, we have 4 steps. Recording opening balance. Opening balance will go to statement of affairs and ledger accounts. In second step is transactions. All the transaction we use the double entry system. Double entries record the transaction in 2 places. Third step, recording the closing balance, which goes to statement of financial position and to the ledger account. Finally, the balancing part. Okay, so you need to know the formats of the ledger accounts. What comes to where? Statement of affairs to find the opening capital. Then the income statement, statement of financial position. So this will be learned in the preparation of financial statement for sole proprietorship as well. Okay. In the paper, the question that you get will cover prime entry books, the chapter 4 prime entry books, and preparation of financial statement, and sometimes the incomplete records all together as one question. Then let me go through the partnership. We cover the important points, right? For the questions, you can watch that videos which I will be sending. Accounting for partnership. In partnership, there are few areas to be covered. One is the definition and the importance of partnership and the theory part. Let me give. This is the theory part. What is a partnership? The definition, key elements, advantages, disadvantages, and the legal background, section 24 and section 42, and the methods of creating a partnership. So these theory parts, just have a brief understanding. Okay. So we know the definition, two or more persons carrying on a business to earn profit. Then in partnership, when it comes to accounting, first thing is the appropriation account, profit and loss appropriation account and current account. Then these are the transactions which comes to appropriation account and the current account. The net profit distribution is appropriation. Right? We distribute the net profit. How do you distribute? Interest on capital, interest on current account, salaries, and share of profits. So these will be deducted from the appropriation and credited to the current account. Then there are three more transactions which will be added to appropriation account. They are interest on drawings, interest on current account debit balance, and share of losses. Rarely only you get these, but these are common. Then current account, right? Then the next part is a change in the partnership. So when there is a change in the partnership, we need to adjust two important adjustments: goodwill and revaluation. Goodwill, remember this double entry. Capital account, old ratio credit, and revaluation. You need to find the revaluation profit or loss. Right? If you revalue the land, profit will be credit and loss will be debit. Then find out the net revaluation profit or loss and divide this profit or loss to the capital account. So that is what you need to know. Goodwill, old ratio credit, new ratio debit. And the revaluation profit, you identify the total profit. If it is profit, credit to capital account. If it is a loss, debit to capital account. That is what you need to know. And there can be a new admission or a retirement of a partner. So when there is an admission or a retirement of a partner, we need to adjust it through the current account and capital account. So mainly the capital account. So there are two main steps when there is a retirement or an admission. If it is a retirement, the current account balance will be transferred to the capital account, and the capital account balance will be transferred to a loan account or will be paid. Most of the times it will be transferred to a loan. An example in this question, here 36 from the current account transfer to capital, and capital account balance 1104 transfer to loan account. So this is what you have in partnership. Right, I'll repeat what is there in partnership. This is maximum. The introduction part, then preparation of appropriation account and current account. So to prepare the appropriation account and current account, you need to know these double entries. Then when there is a change in the partnership, that means a retirement or an admission, you need to know goodwill adjustment and the revaluation adjustment. There's a question, do we distribute the revaluation for the old profit sharing ratio? Yes, revaluation profit or loss shared in the old ratio. Okay, so that is about the partnership. Yeah. So we were able to briefly go through, like we didn't have time to do everything, but the overall picture about these things, right? Financial statement also. And finally, we have accounting for limited liability companies. Right. So company final accounts. This is one of the main part. Okay. So there are 5 components in financial statements. Five components: statement of profit and loss, statement of financial position, changes in equity, cash flow, and notes to the financial statements. The most important thing is these adjustments: inventory adjustment, trade receivables, accruals, PPE, property, plant and equipment, taxation, salaries and wages, share issue, and accounting standards. Adjustments in company accounts. Then we have share issue. Right? So when issue shares, there are 3 steps: applications received, excess money, returning the excess money, and the allotment. Okay. Then there will be normal share issue and bonus issue. Bonus issue means we don't get money. Shares will be issued using the reserves. So double entry: retained earnings debit, stated capital credit. Then you need to understand a concept called capital employed, total capital of the company, which consists of equity capital and the debt capital. Equity capital has stated capital plus reserves. Debt capital has debentures, loans, any other borrowings, and redeemable preference shares. Okay. Right. So this is a sample format of the company final accounts. Statement of comprehensive income, statement of financial position, changes in equity, and you also need statement of PPE and expenses analysis. Right? There is a question: even if we won't complete the whole sum, can we get marks in company account? Yes, you can, because marks will be allocated for this adjustment. So let's say you did only 4, you get 4 marks. Right? So remember this format. And important adjustments I will go through. One is taxation. Follow these 4 steps in taxation. Record the opening provision, then record the under provision, current year tax, and the tax paid. The remaining 2 balances goes to income statement and statement of financial position. Right? I will share the calculations in the videos. Right. So all the questions, you will have a similar set of format in the companies. Okay, so company accounts questions. Every year, the first question, second paper first question will be company and accounts question. Okay. Calculation, I will share the video. Wait. Sorry. This is accounting chapter 1 to 6. 1 to 6. This is the class code. Okay. So this class code, you go to Google Classroom and join class and add this class code. So you can join this class. Okay. So in this chapter 1 to 6, I have done up to financial statements. So here you have all the lecture recordings, including lecture notes, the tudes, MCQs. Tudes are there, MCQ questions are there, right? Online MCQ questions. You can go through that. This is the class code. You make use of it because this has full explanation on each chapter, questions from teacher's guide and questions from the past papers and many other professional courses. Okay, so this is chapter 7 to 10. I will explain how to go to the classroom. And chapter 11 to 16. 11 to 16. This is the class code. So what you have to do is, let me go to another account and show. So you go to Google Classroom and there will be a plus mark here. You click on that. Okay. Then there is join classroom. Join class. Click here and you can add the class code. I have sent 3 class codes. You add here. Right? Then join. In the corner, right side corner, there is join. So if you click that, you will be joined to the class. Here, it will come. I join this class. Right, so this has full recording videos and everything. If you take company accounts here, I have done 1, 2, 3, 4, 5, 6, 7 videos. Management accounting. See, I've done 1, 2, 3, yeah, around 7 videos explaining all the questions from teacher's guide, and most of the past papers also I have completed. Right, I will repeat it. I'm sending the class codes for Google. Okay, I send again chapter 1 to 6, 7 to 10, and 11 to 16. Yeah. Use these class codes to join the Google Classroom. Okay, so if you go to the Google, here, go down, there is classroom. Okay, click on this. And there is a plus button here, plus mark. So click that plus, and there is join class. Give the class code here and join. You can join the class. So you can click the join button. So in that you have full video recording. So can you send it via email so we can join? That's easy for you to join using the code. Okay. And now you have 1 week more, so don't waste your time. Any doubts? Was it useful? Can I get a feedback on the session today? And before your exams, I will try to do several. Now, once you study, before the final, before accounting, I think there are 5-6 days remaining. Okay, so in that duration, what I will do is every day I thought of having a 2 hour or 1.5 hour session just to clarify your doubts. Okay, so whatever the doubts that you all have, I will come maybe in the evening, maybe 7-8 o'clock. We'll have a session. We'll start the session, and whatever the doubts you all have, I will clear them. Okay, so we will. I'm planning to do that. So make use of this recorded sessions because it will be very useful for you. Okay, I have covered. I have explained. Now today I didn't explain individual areas, right? Individual questions. We don't have time to do individual questions today, but in these videos, from basic to in-depth questions, I have covered. Okay. Ask me any questions you all have. What type of calculators should we carry on to the exam? You can carry normal calculator. These calculators you can take. Okay. Don't take scientific calculators because actually according to the it is still confusing with some of the lecturers, some of the teachers, right? Most the government, the notice had can use non-financial calculators. So non-scientific calculators you can use, right? But in exam they don't allow scientific, this FX100, FX991, those calculators are not allowed. So better to use a normal this type of calculator. I will upload this today's session also and share the recordings, so you can, if you had any connection issues and all, you can refer them. And in between, let's say you have more doubts, more questions, always WhatsApp me, right? I will try to give you all the solutions. And most important thing, since you have very limited time now, don't go and find difficult questions and try to do them, because last minute what happens is some students will say, some of your friends will say, oh, I got this question, it was very difficult and we couldn't do, and you also get stuck in that, and your confidence level go down at the last minute. What we have to do is build your confidence, right? You have to be well prepared for the exam, right? From 100 marks to get an A, to get a good result score, you can score above 75, right? You don't need to score 100. So we can't get 100. So therefore, last minute, what you have to do is what you studied, you revise them. Don't go behind new things. And if you try to go behind new things, you will miss what you have studied. So during the last week, Right. So ask me any questions. How to get A pass? Any special tips? Special tips is you follow the basics, right? In exam, don't get confused. First thing, number one, before everything, number one, have the confidence. You can, right? If you think you can, I'll tell you one important thing for your life. If you can, if you think you can, right? How will develop within you? How to do? How to do will develop within you. Okay, so always you think that you can, and you can do this, you can get highest marks, you can get a good result score, right? Then automatically within ourselves, how to do things will develop. Right? You will study more, you will work hard, right? You will think of smart way of studying. Right? So within last few days, what you can do is keep yourself calm. As I said earlier, keep yourself calm and refer what you have studied. Only refer what you have studied. Don't go behind new things, and follow the short notes, mind maps, past papers, right? Easy areas, refer and develop that. I will send all the now in this uh, in this classroom. You have all the tunes. Yeah, I have uploaded all the notes and tunes here, so you can download from this. Any missing parts also I will upload today. Now, if you take Prime NT Books, all the notes tunes are uploaded here, so you can download those tunes. Mind maps, I will share. I will share the mind maps through the emails. Right. Okay, so I wish all of you all the best. Right. This is a very critical moment for you, especially for your batch, because you all didn't have much physical classes. I know it's very hard, it's not easy, but always follow the basics and try to do the maximum, even though will not be very hard, but get prepared for everything. Right now, 2020 paper, do that, and try to do alone and see how much confidence that you have, how much marks that you can get, right? And based on that, try to develop the difficult areas, that try to develop tough areas for you. Okay, so economics, business studies, mind maps are very useful, so use that techniques as well. And yeah, okay. questions. Conclude the session today, and thank you for joining. And I hope to see you all in the upcoming sessions as well. Those sessions I will be conducting before the exam, just for you to clear your doubts. Okay. All the best, and be safe. Situation is not good, so stay at home and try to do your work. Take care of yourself and work hard, work smart, and take good results and make your parents and school and teachers proud. Okay, so that will that will take you to a different place. Even my life entirely changed because of my advanced level results. Right, I got 3 years from the A level, and that changed my entire career. Right, I was working as a a normal office assistant after my A levels, right, before the results release. But when I get the results, I was able to work in a corporate, a big company, and that entirely changed my career. If not, if I get a lower results, I would have been in a different category. But now, it changed, right? So this is the time that only 1 week. No? So in this 1 week, you try to do your maximum. Okay. All the best and take care. Be safe. God bless you.